Hey everybody, Smart Silver Stacker here, and today I want to talk about how the price of silver can stay down for so long. Because for most stackers, a lot of us have been doing this for a while, and people have been saying that the price of silver is going to be going up for some time. You know, there's a lot of people on YouTube and a lot of people out there, a lot of people in the Liberty movement who have been talking about silver. There's folks like Peter Schiff and Chris Duane, all those guys. But why hasn't the price of silver gone up? Because we were at 50 bucks back in 2011, or very close to it. And right now we're sitting at 24 and change. And in the intervening decade, silver's been hanging out in the teens, the low teens, even as recently as last March. And it's just not moving up. I mean, last year was a pretty good year for silver. But overall, we're still at basically half of the 2011 high. Now, gold's having a little bit of a better time, and that is what you would expect at the beginning of a bull market. Still, silver has been languishing to some extent, although it's begun moving recently, and I think that trend is probably going to continue. But why has it stayed down for so long? A lot of people watching might think that it's because the market is manipulated. And certainly silver especially is a very small market, and it can be manipulated. And you have to remember that the physical metal itself gets its price from futures contracts, which are a derivative of the physical metal. So it's kind of a bizarre situation in the silver market where the price of the metal is determined by a derivative of the metal. But that's how it works, and it can be manipulated. And you know, JP Morgan, of course, was found guilty of manipulating the precious metals markets very recently, just at the end of last year, and had to pay almost $1 billion in fines, which I'm sure was really just a drop in the bucket for them. But there is some manipulation in the precious metals markets, no doubt, but I don't think that that's the real reason that the price is suppressed. I think that it's a psychological phenomenon that the price of the metal has stayed down so long. And that's because most people today, you know, the average person doesn't really have a clue the difference between sound money and fiat money. They don't have any idea how the monetary system works, or the fact that we used to have sound money, but for the past 50 years, we've been conducting this experiment in fiat money. The average person doesn't know that in 1971, the price of gold was $35. Yeah, they just aren't aware of these things. They don't teach you this stuff in school, and it's certainly not out in the mainstream, so why would people be aware of any of these facts? You know, for example, just look at how popular the stimulus checks we've been receiving are. You know, it's not a secret that the government is $27 trillion in debt, but people still expect these large recurring handouts of money from a government that they know is broke. It's not a secret that there's no money to distribute, that's all got to be financed by debt, but really people just don't care. They've been conditioned to believe that the government and the Federal Reserve are all powerful, and they're fed that line by the media, the mainstream media primarily, on a regular basis. These Federal Reserve governors are put up on a pedestal, and you know, the media, the mainstream financial media, kind of worships the ground they walk on. But they're not all powerful. Unfortunately, it would be nice if a law or twiddling with interest rates could really improve the economy, but I just don't think that's how that works. And they can't just magically fix the debt crisis that we're in, or the gutted economy. Basically what they can do is they can try to soften the blow, or spread things out, or kick the can down the road, however you want to look at it. You know, politically, and I'm not trying to get political or upset anybody who's watching the video, I am pretty much political agnostic, both in my personal life and on the channel here. You know, both sides now support these direct cash payments, and basically, if you're on the right or you're on the left, it's political suicide to stand against stimulus at the moment. A couple weeks ago, or a month ago now, Mitch McConnell was delaying that stimulus legislation and delaying the stimulus checks from going out. And he was, I believe, instrumental in dropping the checks from $2,000 to $600. that week, social media just went nuts. There were all these Mitch McConnell memes going around, and people posting his personal address on memes and all this stuff. It's just really unpopular to be against, all this enormous spending at the moment among your average person, regardless of whether you're on the right or the left. I've even overheard Trump supporters, and again, I'll probably upset some people by, even talking about politics, and I know that not picking a side and kind of staying in the middle of the road is an unpopular position these days, but I'm not trying to be political, I'm just pointing these things out. But I've overheard Trump supporters having conversations where they were saying that, Donald Trump was the only thing standing between us and socialism. And this was at the exact same time that the guy was calling for these larger direct payments to American citizens. Now, regardless of where you stand on whether there should be some kind of universal basic income or, stimulus payments going out on a regular basis, the fact that they're being financed with debt creation and being financed simply by conjuring dollars out of thin air should be of some concern to people. I'm not trying to say that people don't need stimulus checks or payments like that, but just from a mathematical standpoint, there isn't any money to distribute, so it has to be created out of thin air, and we already have these enormous amounts of debt. So people are aware of all of those things, but they don't know anything about metals, and it doesn't concern them that the government is running these enormous debt levels. They hear everything's going to be okay. They see that the stock market's at record highs, and the economy must be doing great, because sometimes the numbers are better than expected. You expected 1 million people to be unemployed and only 900,000 were, so that's supposed to be good news. And people buy that. So it's not going to be until people's mindset changes that the metals really start to take off. And I think that moment is probably approaching. It's, I think, probably also impossible to tell exactly when that moment will come. But something Ayn Rand said was, you can ignore reality, but you can't ignore the consequences of ignoring reality. And pretty soon, I think we're going to begin running into some of those consequences of ignoring reality. And we're going to run into them rather hard. And it's going to be at that time when the music stops and the bankruptcies increase and all of the bad debt that's out there in the market either has to be defaulted on or it has to be inflated away by money printing and there's no other choice. That's when the game of musical chairs is going to stop. The music's going to stop, and the people holding fiat currency are not going to have somewhere to sit. And the people with physical, real, hard money are going to be the only people sitting. And there's going to be a lot of people trying to get those chairs, and what that's going to look like is an enormous amount of fiat currency chasing a very limited amount of actual physical metal, not derivatives of physical metal like ETFs or futures contracts, but real physical hard money. And that is when we're going to see the price of silver take off. And that might even look like something like the spot price staying where it is and trading in a normal range, but the price of physical may go up dramatically. Who knows? Maybe the paper price will come along for the ride. It's kind of hard to say, and we're definitely living in what I would call interesting times, and I don't think that the outcomes of these experiments in monetary policy are going to be predictable to anybody, really, at the end of the day. But there is one predictable outcome, and that is that if you keep creating fiat money out of thin air endlessly, it's eventually going to lose value. And I think that's going to be the outcome that we're looking at. Low prices for stackers should just be looked at as an opportunity to continue to add to your stack, because there's going to come a time when the price does move up a lot, and you're going to just look back at times when you could stack at a lower price fondly. Like many of us probably look at back when silver was $15 an ounce compared to today. That's a pretty significant discount to today's prices. So whatever you stacked back then, that's the only $15 silver you're going to get. And sure, silver could drop to $15 again. Anything's possible before it takes off, but that seems unlikely to me at this point, and I think that the trajectory of the metal is probably going to actually be much higher. Of course, none of this is financial advice. It's just my thoughts on the silver market, but I really do think that that is why the price of the metal has stayed down. It's just people don't have an idea of sound money, but they're going to get one, and we're all going to get an education on it, I think, here in the relatively near future, whether we like it or not. So let me know what you think in the comments below. Am I way off base, or do you think that maybe that is actually at least one of the factors for why the price of the metal has stayed low all throughout the past decade? Let me know. I love when I get comments. And if you liked this video, go ahead and give it a thumbs up. Click that subscribe button, that bell icon, so you get notified of future videos. I really appreciate everybody who watches. Thank you very much, and I'll catch you next time. Smart Silver Stacker out.